Now we have another special rule for a particular type of property. And these are called, they call it luxury automobiles. They're not really luxury automobiles. It's just automobiles. And it applies to automobiles that are less than 6,000 pounds. Essentially, passenger autos. SUVs, those big vehicles, big trucks, have some of their own rules. But these are, so, your Camrys, your Nissan Altimas, that kind of thing, your passenger vehicles. So passenger vehicles have an additional limit, and it's a per year limit on how much you can deduct. And this includes any 179 bonus or regular maker's depreciation. Essentially, the point behind this is to keep people from buying really expensive cars and just writing them off, right? Buying a really expensive Lamborghini for their business and then saying it's for business and then writing off a $200,000 car and getting a big tax deduction for it. So the limits for automobiles, like I said, they're called luxury auto limits, but it's really auto limits. I would never call $20,000 a luxury automobile, especially in this day and age. So what happens is the first year that you own this, the most that you can take in combined 179 bonus and maker's depreciation, in the year 2024, the most you can take is $20,400. So you do your calculation of how much bonus you're going to take or how much 179 and what your other depreciation is, your maker's depreciation. It cannot exceed $20,400 if you bought it in 2024. Next year, the following year, you won't be able to take more than $19,800 of depreciation on that vehicle. And then the third year, you won't be able to take more than $11,900. 2027, $7,160 for and continuing on. So if your car costs more than, what is that, 40, about 50, about $60,000, because after, well, say 67,000, I guess that would be getting into the luxury area. Even though it's a 5-year vehicle, you're gonna have to depreciate it for longer than that, because they don't want you buying these really expensive vehicles and then depreciating them and getting a big tax deduction for it. Okay. So we've got here an example. Allison purchased the Toyota Camry for $25,000. It was used 100% for business. Now you have to take this into account. How much is it being used for business? Because that's the amount you're going to be able to depreciate. So this Camry, if it was, well, there's an example down here of it when it's less than 100% for business. The bonus expense deduction in section 179 would normally produce a deduction of $25,000 if she was able to take it all. But because it's classified as a luxury auto, it falls under that category. The most she can take is $20,400. That's her maximum amount of deduction in 2024. In this example, Jackson has a new car, purchased it for $20,000. He used it 75% for business. So what you've got to do is figure out what's your business percentage. So $20,000 total basis or purchase price, 75% for business or business use. Business use percent is 75%. So business basis, $15,000, right? What you'll also have to do, though, is apply that business use percentage to the auto limit. So our auto limit, so 20,400 times 75% is going to be 15,100 is the limit. That's the most he could take. Well, his business basis is $15,000. 15,300. Sorry. Thinking the opposite way. So this means that he can go ahead and write all of it off this year because it's not more than that limit. If it were more than that limit, let's say that this was 40,000. And this is 30,000 is the business basis. We still have this limit, 20,400 times 75, so this limit still applies. So maximum for 2024 would be the 15,300. The remainder is going to be in future years. So was it 14,700 gets carried over to next following years. This would be, we would use maker's depreciation for the rest of it, because you only get to use that bonus depreciation and 179 expense in the first year that you own that business or that asset. Let's see. So there's another special rule. So this is for vehicles again. So luxury autos. Which means they are under 6,000 pounds. Now, if you have a vehicle that is over 6,000 pounds, there are additional limits on it. These limits don't apply, but there is a 179 limit. So if it's over 6,000 pounds, then there's a 179 limit of, and this changes every year, 30,500. But there is no bonus limit. So you could only take 30,500. So let's say you have an SUV, a Hummer that's in your business, and you spent $70,000 on it, and you choose to take the 179 deduction, you're going to be limited in that first year of taking 30,500 on it. But you can take the full amount of bonus depreciation if you wanted. So you're really not limited. When they institute, the bonus you could take 60%. Sorry. So your limit there would be there's no bonus limit except so you take the 60%. So let's just say it was a $100,000 vehicle basis. If you're taking 179, you could take 30,500. If you're taking bonus, you could take 60,000. If you were taking makers, again, it's got to be over 6,000 pounds to be able to do that. If it was under 6,000 pounds, you'd be limited to this in the year, the 20,400. So we've essentially got, let's look at this example, then I'll do kind of a recap. So Javier purchased a GMC Yukon for $46,000 May 3rd. Could be used 100% for business. He could deduct a maximum of $30,500 in 179, and then he would get to take maker's depreciation of $3,100 on the remainder of the basis. So, and that's calculated by taking the 40 full basis minus the amount of 179 that he's taking this year, and then he would multiply it by the first year depreciation. This is from the table, 5-year, half-year convention. So that's where that 3,100 comes from. So he would get to take $33,600 in write-off for that. So GMC Yukon, if he took the 179 expense, but he could take the 60% bonus instead and get a bigger write-off immediately, right? So to kind of recap, so we've got our depreciation, we've got those 4 conventions that we talked about for our maker's depreciation. So we have, let's see if we can maker's depreciation, we've got the 4 factors that we need: basis, class life, convention. So remember, class life, we may have 3, 5, 7, 10, 15, 20, 27 and a half, 39 different years. Convention, we've got mid-quarter. I'm sorry, let's not put that one first. Mid-month, and this is for real property. We've got half year or mid-quarter, and that's for personal property. And remember, we only use this if more than 40% personal property purchased in the last quarter of the year. And then we also have our methods, which could be 200% declining balance, 150% declining balance, or straight line. So that's for our makers. And then we have some exceptions to that. So we've got section 179 expense. We have this is subject to limits, and this was, so the 2 limits, first limit is total personal property purchased. So remember, that limit is 3,050. Once we've purchased more than 3,050,000 in the year, the 179 limit starts to get reduced, and then we have our 179 total limit, which is 1,220,000. Okay, so this is subject to limits, and it just applies to personal property. And then we've got our bonus depreciation. So less than 20-year property, that's greater than. And it's 60% bonus in the first year. Then we have our listed property, and this is property that is can be used business and personal, mostly cars, not necessarily exclusively, cars and entertainment type of property. So it can be used business and personal, business use over 50%. We're going to use makers. Business use, I should say, equal to or over 50%, equal to or greater than 50%, business use less than 50%, straight line depreciation, and then we have to recapture. So straight line and recapture. And then we have luxury auto rules, which limits total depreciation per year. And this applies to under 6,000 pounds. And then we have over 6,000 pounds. That 179 limit is 30,500. No bonus limit. Kind of sums up the depreciation section here. I'm going to move this over here just for a second. Hopefully that can be seen. Okay. Lots of information here. I think that's so. Leased vehicles, IRS has limits on how much expense you can take when you're leasing. They have a table that they use. That's this lease inclusion amount based on the vehicle's fair market value and the tax year in which the lease began. The full year lease payment is deducted unless business use is less than 100%, and then the income inclusion from that table reduces the deduction. So you take the full amount that you could take, and then you add back whatever that inclusion amount is in that document. You got to have adequate records to document the business use and the time or the mileage for the vehicles. You have to keep records, and I'll talk about that in the next section here a little bit more too. We're going to talk about travel and transportation expenses. So that sums up depreciation. Questions? I know it's a lot.